Reasons to move money from cryptocurrency into real estate in Bali. That's the topic, right? Now, the crypto people will try to pull things their way, and we'll pull things our way. No, actually, this topic is much broader. And today we'll talk about diversification and the potential of different markets, specifically cryptocurrencies and the Bali real estate market. But overall, we'll discuss various financial and investment instruments. And in the meantime, subscribe. Here you'll find high quality, very concise content. Information about the Bali real estate market without any fluff. Let's go. It's a very common story when someone comes to our company who isn't an investor. I hear this a lot in meetings when managers say, "A client told me I have a business in Ukraine that brings me 30% annual returns, and your real estate will only bring 12%. That's not profitable for me." Sounds funny, doesn't it? But let's break it down just in case someone doesn't get it. Look, there are many different financial and various investment instruments available with distinct risk classes and diverse potentials, including the potential for significant capitalization and so on and so forth. Look, if we consider just one parameter, ROI, yes, of course, you can invest in Bitcoin and make multiples in a few years. Or you might not, who knows? See, Trump posts something. The price moves one way, Elon Musk tweets something, and it goes the other way. Everyone understands the volatility of this market and the risk factor. You can invest in some meme coin and make 100 times, or you could end up with zero. That's obvious, right? If we compare different investment instruments based on just one parameter, well, that's at the very least unqualified. Let's break it down. What are real estate investments? The first thing is a capitalization. That is, your asset is backed by square meters, by the economy of the country or region, like Bali, for example. What backs and protects the capitalization of a square meter? Well, not to mention, we're not even talking about preservation here. We're only discussing the investment instrument itself. Tourists, 16 million tourists a year who come to vacation in Bali. That's what backs the capitalization of your property. If you built a villa for $3,000 per square meter somewhere on a deserted island where no tourists come, what backs the real estate there? By nothing. You see what I mean, right? So the first thing is capitalization. How much will your investment asset be worth in 10 years? And what is it backed by? That is real estate, cryptocurrency. It's a digital code, of course. It has some kind of rate, it's traded on exchanges, it has a certain value. You can freely convert it from dollars to cryptocurrency, from cryptocurrency to dollars, and so on. It's freely convertible, but it's not backed by anything. So it's purely a speculative instrument that people use in extreme cases as a way to move money from one country to another, which also, as you understand, won't last long due to regulations. Besides capitalization and backing your asset with something physical and reliable that's inside some properly chosen market or region, the next thing is rental income. You can also invest in gold, but gold doesn't give you monthly or daily income. Real estate does. And the rent you receive, it's common for real estate to cover inflation, but when it comes to capital appreciation, in reality, real estate is actually very closely tied not to the inflation index. And besides having correctly guessed the location, you also have the potential for growth itself. It's the location, the increase in land value in that location, if you have chosen the location correctly. The value also grows due to these factors, but in addition, there is also an indicator of inflationary growth, especially in tourist markets like Bali, where a tourist comes and pays in foreign currency. They are on vacation, enjoying life, and for them, whether it's $200 or $220, it's a small difference. But for us, that's 10%, which is a huge difference. And every year, property values increase due to inflation. Some properties in Bali in our portfolio have a 77-year leasehold, which is practically like freehold. So you can multiply it out and understand what kind of multiplier you'll have in the future. And inflation, the rate of inflation, accelerates over time. That is, as soon as money is printed, the value of your asset automatically increases. If you're holding cash, you simply lose 9% of your value every year. With your money in real estate, you're protected by the rental income you receive each month, which compensates for inflation, and in the case of the Bali market, you actually earn even more you stay in the black, and on top of that, your property also appreciates in value. In addition to appreciation from growth, inflation, and currency devaluation, there's another factor that we multiply in. The tourist flow to this area, Bali, the entire region, we multiply that by the increase in your property's value due to a well-chosen location where land prices are rising and infrastructure is developing. Infrastructure is developing in this location. Right now, this is the most popular, fastest growing, and most promising area. This is Pandawa. On Bukit, on the peninsula, in the Pandawa beach area. Got it. You can't compare cryptocurrencies, operational businesses, where anything can happen, anyone can show up. But in these third world countries, there are raiders, bandits, and so on. If you're in the civilized world, there are factors like taxes, crises, and so on if you invested in real estate right before a major financial crisis. Real estate in Bali is a good asset because tourists keep coming, just as they always have. For them, for Australians, wealthy Australians, Filipinos, Singaporeans, Europeans, a vacation in Bali. It's a very inexpensive vacation. And for them, it's not really a big deal, whether they spend 200, 220 or 170 there. So, tourism in Bali won't really suffer much from a financial crisis. What will be affected are some super luxury formats, yes, and formats where people vacation. Well, let's say people who aren't wealthy. In places where people with good incomes vacation, for them, this kind of money is insignificant. If you haven't been to Bali, you should see how Australians vacation here. In general, people here don't really count their money, they just pay as they go. You don't even look at the bill, you don't check the prices on the menu, you just pay, It's ridiculously little compared to what you're used to spending in Europe, Australia, Singapore, the Philippines, and so on. And of course, diversification. Real estate, which encompasses various types of properties and land, or high-risk financial assets like volatile cryptocurrency or publicly traded stocks on the global stock market, or even establishing and operating a business venture. Your own business, for example, where you invest in working capital or certain assets within your business. Real estate rental property in a tourist region is a form of diversification. If you have only just one investment or financial instrument in your portfolio, that's not very good either. You always need diversification. And of course, to wrap up, let's put it this way. Almost everyone, except maybe Pavel Durov, almost everyone who builds their capital from completely different sources, they all eventually end up investing in real estate. Why? We've discussed these reasons. And of course, this is already a very grown-up, the most mature, final level for any investor or entrepreneur. But for a person who generates income, that income needs to be preserved somewhere, to be parked somewhere. And by the way, one of the latest examples is Alexander Usyk and his company Ready to Fight. They entered the development market very brightly, powerfully, and quickly, particularly in development in Bali, but not only there, also around the world. So, I also interviewed Alexander, and we talked both during a webinar and in other contexts. Alexander is an athlete who earned a very good fortune through his talent and hard work. This money wasn't just, as you know, yes, there are different examples, athletes, successful celebrities, and so on, who squander. They manage their wealth in different ways. Alexander made the decision to become an entrepreneur and investor and to park his capital in real estate and develop himself in this business, in this segment, like many truly successful people. And this is a vivid example that all financial roads lead to real estate. And in fact, thank God, we have the opportunity to enter with large sums, 1, 2, 3 million, and you're already in real estate. In Bali real estate, you're already a pretty serious player, a serious investor. People take you into account. In Dubai, for example, you're just ordinary. You don't influence anything. But even $100,000, $150,000 or $200,000 is enough to invest in Bali real estate, earn a very good rental income, and increase the value of your property. But only if you have chosen the right property, the right location, the right developer, checked the quality, checked the documents, and checked the land. And so on, and so on, and so on. We've discussed all of this in other videos. Of course, watch them and subscribe to our channel. Here you'll find only concentrated, useful information about the real estate market. No fluff, just the facts.